Hey everyone, welcome back to Investosphere, your go-to channel for smart investing and financial freedom. If you've ever experienced a stock market crash, you know how gut-wrenching it can be. But guess what? You can recover. And today, I'll show you exactly how. In this video, we're going to cover 5 powerful strategies to help you bounce back stronger than ever. So grab a coffee, hit that like button, and let's dive in. Point number 1. Stay calm and assess the situation. First things first, do not panic. Market crashes are painful, but they are also a normal part of the investment cycle. Historically, the stock market always recovers over time. Look at past crashes like the 2008 financial crisis or the dot-com bubble. Investors who stayed patient came out ahead. Check your portfolio. How much did you actually lose? Sometimes, the losses look worse than they actually are. Reevaluate your risk tolerance. Maybe it's time to adjust your strategy. Have you ever made a panic decision during a crash? What was the result? Point number 2, rebalance your portfolio. After assessing your situation, the next step is rebalancing your investments. This means adjusting your asset allocation to reduce risk and improve potential returns. If stocks have dropped significantly, this might be a buying opportunity. Shift towards dividend-paying stocks or index funds to stabilize your portfolio. Diversify across different sectors and asset classes, stocks, bonds, real estate, and even alternative investments like crypto. Do you prefer individual stocks, ETFs, or index funds during uncertain times? Drop your answer below. Point number 3, continue investing with a strategy. A common mistake investors make is stopping their investments when the market crashes. Instead, you should continue investing with a solid plan. Dollar cost averaging, DCA, invest a fixed amount regularly, whether the market is up or down. Identify undervalued stocks and invest in strong companies. Consider a long-term approach instead of chasing short-term gains. Do you think market crashes are good buying opportunities? Why or why not? Asterisk. Point number 4, build an emergency fund and manage debt. If you're heavily invested in stocks, it's crucial to have an emergency fund to cover unexpected expenses. This helps you avoid selling stocks at a loss. Keep at least 6 months of living expenses in a high-yield savings account. If you have debt, focus on paying off high-interest loans first. Avoid using credit cards for stock investments. Margin trading can be dangerous during volatile times. How many months' worth of expenses do you keep in your emergency fund? Point number 5, learn from the crash and plan for the future. Every market crash teaches us something valuable. The key is to learn and adapt so you can be better prepared next time. Study past crashes and how investors successfully navigated them. Strengthen your investment knowledge by reading books, watching finance content like this one, and following expert insights. Set realistic financial goals and stick to them. What's the biggest lesson you've learned from a stock market downturn? Asterisk. So there you have it. 5 actionable steps to recover from a stock market crash. Remember, investing is a marathon, not a sprint. Stay patient, stay informed, and stay invested. If you found this video helpful, make sure to smash that like button, subscribe to Investosphere, and hit the notification bell so you never miss out on future investing tips. Also, drop a comment below and let me know which tip helped you the most. Thanks for watching, and I'll see you in the next one. Happy investing!